Welcome back, traders. This video today is going to be like a part 2 to the previous video that I did on support and resistance. So if you haven't already seen that video, make sure you go and watch it. So in the last video, we talked about what I like to call floor and ceiling support and resistance. And this is basically support and resistance that is built off of price rejecting a certain area multiple times. However, the support and resistance that we're talking about today is key level support and resistance. This type of support and resistance can actually be a future or predictive type of support and resistance. Every trader and even investors as well need to understand this type of support and resistance because it's what the smart money uses. And if you're not familiar with smart money, it's basically the big money in the markets that take away all the money from the dumb money traders. Dumb money traders are the traders who have no idea what they're doing and they haven't liked this video and subscribed to this YouTube channel. And before I start this video, make sure you go and join the Market Minds Discord community down below. Our analysts have been killing it this month and we've recorded over 2,000% in gains so far. Now let's get into the video. So before I start explaining how to find and draw these key levels, I'm first going to explain how I categorize my support and resistance. So I usually break it down into 5 types of support and resistance. This is your floor and ceiling, structural, key level, supply and demand, and moving support and resistance. However, like I said, for today's video, we'll only be talking about key level support and resistance. So I define key level support and resistance as a psychological whole number price that has historically acted as support and resistance or has future potential to act as support and resistance. You'll begin to understand the definition once I go and show you on my chart. So if that doesn't make sense to you, it's okay. Also, since key levels are like future support and resistance, there are a few ways that you can know if price is actually confirming these levels as support and resistance as price approaches these levels. So the 3 ways that I use are major rejection, volume, and chart patterns. And I'll also show you examples of these once we go onto the charts. And also, if you've made it this far, make sure you drop a like on this video because now I'm going to go and show you how you can draw these key levels using Bitcoin. Here we have an empty chart of Bitcoin, and in the past year, Bitcoin has had some insane moves and it respects key levels very well, which is why I'm using this for the example. So when we're looking at key levels on Bitcoin and we're trying to find whole numbers, you'll realize that Bitcoin has actually a lot of levels, and you'll see this with stocks and Forex and stuff as well, because essentially if you look at whole numbers on Bitcoin, you might see 48,000, 46,000, 44,000, and all these different levels, right? And what you'll realize is that the key levels need to be large whole numbers relative to what you're actually trading. So if I'm trading something like Apple that's sitting at around $130 right now, a key level wouldn't be $100 and $200. It may be $100, $115, and $130. So now that we're looking at something like Bitcoin and using that same type of just relative price, what you might want to look at is that now we have a 30,000 level that we might look at, a 40,000 level that we might look at, a 50,000 level we might look at, and a 60,000 level. And also go in and throw down the 20,000 level that we'll use in our examples later as well. So now that I've got these key levels thrown in, they're a little bit off by like a few $100s or so, but it shouldn't be that big of a deal. However, I have these key levels in, and what you'll see is that price generally sits around these levels, and we'll use these levels as support and resistance. Also, I just want to throw this in on a side note is that you actually can put smaller key levels. Like if I put 32,000 on Bitcoin, that could work as a level. You'll see that price respects it. However, what you have to realize is that the lower you go on these key levels, the less valid these levels will be. Price will always respect higher levels and like higher time frames overall. So you'll see that 30,000, 40,000, 50,000, 60,000, all these levels will be a lot more major areas that you can rely on a lot more. So now I'm going to show you an example of how I use the key levels to trade Bitcoin. I posted this on my TikTok already, so if you don't follow me on there, make sure you go and follow me. However, one thing that I talked about in my TikTok video is that I actually sold Bitcoin at 40,000 and I was looking to go and buy back in roughly around 30,000. And the reason I did this was because there was no historical resistance on Bitcoin. I love using key levels when price is breaking towards new highs because you have no historical price to determine where resistance is. So what you have to use is basically key level support and resistance. So when I bought Bitcoin and I saw this massive run and I saw it become just more and more exponential, I knew that we would see a larger correction, and it was more or less where we would see the the large correction. And essentially I was watching the 40,000 level to see if this key level, support and resistance, would actually turn into a level of support and resistance, or more or less like a floor and ceiling type of support and resistance. So using one of the confirmations, right, we had a major rejection. When price came up and touched 40,000, it just shot right down. Price came back up again, it dropped again. So when price came up to this level, I sold off at 40,000, and you can see that price ended up going a little bit past it, but it's like it's not that big of a difference. And you see that price ended up selling off quite aggressively, almost down to about 30,000, where I started buying dips in at these levels. And that's essentially how you can use these key levels to just predict where support and resistance will be, and then be able to capitalize off of it as well. Now, like I said, I want to explain the 3 ways that you can find confirmation of whether a future or like predictive key level is actually valid. So I already basically gave a hint or showed an example of how I used it before. And the first one that we have was major rejection. So if you go on any time frame, let's say I were to go on to like an hourly time frame, and we go back to this key level, you'll see that right once price hit this 40,000 level on Bitcoin, you see a very strong wick rejection, which was very like different from how Bitcoin was moving before. Every time it dropped, it would rise again, drop, rise again, drop, rise again, and then you see this aggressive sell-off here. That's how I knew that 40,000 was a whole number, and this is where we were likely to see more of a correction coming from Bitcoin. Now, the second type of confirmation that we receive is volume. Volume basically tells you where people are buying and selling, and it's a great way to know if a key level is valid. So what you'll realize is that volumes is going to be here. People are constantly going to be exchanging shares and stuff like that. That's always just going to be happening. But what you want to see are these major spikes in volume, essentially, where you see where price is starting to basically spike, and you're seeing that there's more aggressive buying and selling at these areas. So what you'll see here is that when price comes down to 30,000, you'll see that there's an aggressive volume spike each time that price touches down on this 30,000 level. So you know that people are really buying and selling off of 30,000, and since it's a key level and you'd expect it to be support at this level, you can make the assumption that people are buying. Now, when you see price come up to this 40,000 level again, it already tested this level, and essentially if you're still holding a bullish bias on Bitcoin, you would actually expect price to break out of this level. So volume is a good indicator to show if a breakout is valid, and you see that when price breaks above 40,000 and makes a new high, you see a lot of volume behind it, and results in a rally all the way up to over 56,000 after that. And for our final example, I'm actually going to go into the 1 hour time frame just because Bitcoin moves so quickly. But our last one was chart patterns. This could be your double tops, your triple bottoms, whatever they want to be. These are your chart patterns that will basically give you a hint as to whether or not price is being respected. So right here, you see price starting to slow down at this 30,000 level, and price breaks above it quite strongly. That could already be one possibility, knowing that 30,000 is a key level just because price was stalling and you see a strong breakout. However, the real way to get confirmation is when it comes down and retest, and you'll see that we get this sort of double bottom type pattern right here, and then price continues. And that's just one way that you can see that, okay, price is still bullish. And then on top of that, you also get a candlestick confirmation. Let's see, I'm gonna put on this right here, and you see that you get a double bottom and a nice bullish engulfing candle. Let's say that you put your stop loss below the key level and you target the next key level, and you'll see that you have a nice 1 to 5 risk to reward. And this is one trade that you easily could have taken on Bitcoin. All right, I want to keep this video a little bit short, so that's going to be all for the video. Key level trading is something that I use all the time, and I implement it in all of my trading strategies. And just as a whole, it really is important for just support and resistance overall. If you liked this video or found any value in it, make sure you smash the like button and subscribe to my YouTube channel. We just recently passed 300 subscribers, and my next goal is now 400, so make sure that you subscribe. And if you're not in the Discord, make sure you go down and use the link in the description to join. We are a really fast growing community, and we have some killer analyst plays in there on top of that with really good educational content. So once this video is over, make sure you scroll down and go and join using the first link in the description. Thanks for watching.